The dollar versus Swiss has seen moves to the downside and to the upside this week. We're trading about near mid-range of the trading week. I'll go through the technicals that are driving this currency pair as we head into the end of the week and into a new trading week. So let's get started. The pair has been influenced by tariff news. Recall from earlier this week, President Trump enacted one of the highest tariffs on the country, Switzerland. He's citing that their $40 billion trade deficit with the United States is not good enough, and they're not making good enough concessions to the United States. We saw the Swiss president come to the United States, meet with President Trump without any success. They're still working on a deal, trying to make him happy. As a result, we saw some weakness in the dollar versus or the Swiss franc, but the price has been contained. I'll talk about the technicals from here. Taking a look at the hourly chart, what we see in trading this week is that the market initially moved sharply to the downside on Monday, but what did we do? We found support buyers near this swing area right through here, also near the 200-hour moving average. That's a green line in this chart. We saw the rotation back to the upside. That moved to the upside. Initially moved up to the 100-hour moving average, tried to stay below that level, and then broke above that level, finding the new high for the week at 0.8116. That came, near after the Swiss tariff news. Took the price above that 100-hour moving average. It looked like that was the direction we were going, but then the price quickly rotated back to the downside, and we saw willing sellers pushing the price to the downside. Since then, we saw the 100-hour moving average stall on Wednesday, move back below the 200-hour moving average, but found support buyers near the 50% midpoint of the move up from the low price that we saw going back to the this low right here. I guess that's around July 21st, 22nd, to the high. The ability to hold that 50% retracement gave the buyers the go ahead to push higher. And over the last few days, we've seen the price high come near the high from Wednesday. High, ceiling level in play. That's the key level for traders in the short term for the dollar versus Swiss right now on the top side. Now we are moving lower in trading today, and we are now below the 100 and 200-hour moving average, which tilts the bias more to the downside. On the downside, the key level that we target for, if the price can stay below this level, would be the 50% retracement down here at 0.80405. We get below that level, then we start to look toward the low price from the week and near this swing area right here, along with the 61.8% retracement. So key resistance right here, get above that, opens the door for further upside. Key support right here at the 50% retracement level. Admittedly, nothing is decided right now. The battle between the buyers and sellers is continuing. We may have to wait until next week to see how that battle is figured out. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.